Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Adtalem stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, 2.7 billion market cap. They're trading at $73 a share. When you spin those two numbers around, the 7 and 3 turn into 37. They have 37 million shares outstanding. Adtalem offers degree and non-degree programs, including bachelor's, master's, and doctoral degrees, as well as online certificates in the medical, nursing, health professions, vet education, counseling, business, psychology, public health, social work, and criminal justice. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had nice free cash flow in 2021, $150 million, solid margin 17%, negative free cash flow in 2022 with higher revenue. Expenses went up a lot, so a lot of companies got squeezed, but they adjusted and now they have positive free cash flow. And it's growing, $247 million in 2024, 16% margins. Net income is a profit or loss on the income statement. It's revenue minus expenses. Similar trend, positive and negative, then growing, peaking in 2024 at $138 million. Revenue is a sales for the company, and that grows each year from $900 million to $1.6 billion. So pretty good financials. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $7.4 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $6.3 billion. We divide that by 37 million shares. And we get a calculated stock price of 171. They're trading at 73, so they're trading at a 57% discount. It's a really strong buy according to the model. Do you think it's a buy or sell? Let me know in the comments. Simply Wall Street is right there with me. They're at 201 a share. They say they're 64% undervalued. There are 42 companies in the same industry as Adtalem, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend about double the median in CapEx, $49 million. These are the investments in property, plant, and equipment. Debt to equity ratio is between the median average. For every dollar of equity, they have 60 cents of debt. They don't pay a dividend. Strong free cash flow, $247 million. They rank 6th in market cap at $2.7 billion. They're trading at 2 times book value, a little worse than the average, 20 times earnings between the median average, 11 times free cash flow. That's one of the better ones on this list. Look at Chegg, 2.5 times free cash flow. We'll do a video of them in a couple of days. And they're trading at better than 2 times revenue. They generate $1.6 billion of revenue, which is more than Grand Canyon, and Grand Canyon is a lot bigger in market cap, about 50% bigger. And their 5-year annual revenue growth rate looks good at 9%. Here's their latest income statement from their 10K. They completed their 2024 fiscal year. Their fiscal year ends June 30th. You can see revenue goes up each year, 1.4 billion, 1.5 billion, and 1.6 billion. I'm rounding up in each case. Expenses are going up as well. They're a little under 1.4 billion. Cost of services, 700 million. Admin expenses, 630 million. Operating income is up. It's well more than double 2022's number, up about 40 or so % from 2023. They spent 63 million of interest on their debt, 26 million of taxes, so net income 137 million. 2 years ago, they had a net loss of 36 million. That's from continuing operations. They did get rid of one of their business units that generated 470 million of net income. So they actually had 310 million of net income if you include everything. Often companies separate continuing and discontinuing operations because this business unit that generated 470 million of net income is not part of 2024's numbers. EPS of 350. And shares outstanding are going down a lot. It was 48 million, now it's 39 million. That's what you like to see. Shares going down, revenue going up, net income going up. That's a perfect formula. So to summarize, I have them trading at a 57% discount. This is one of the best stocks we looked at in this industry. I rank them 8 out of 10. Would I buy them? Looks really attractive, 8 out of 10. Ratio 6 out of 10. They do have a really good price to free cash flow, but their other ratios are worse than the median. Financials 8 out of 10, really solid numbers. Besides that blip of negative free cash flow in 2022, numbers look solid. Free cash flow up 62% since 2021. Revenue up 76% since 2021. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.